Hello traders, welcome to tradingwithbill.com. I'm Bill, and today we're going to do a lesson on what I call the strategy of the ABCD strategy using the Fibonacci tool. And if you do not know what Fibonacci is, if you just go to YouTube and stick in whatever instrument, Forex, Fibonacci, you'll get plenty of webinars and information on what Fibonacci is. So it's real important that you have a very good understanding of Fibonacci to use this application. And if you don't, you'll have a pretty good understanding by the time we're finished. Alright. So what we need to do here is we need to find the trend of the market. We're on a 60-minute chart, but you can ignore that. Whether you can be doing this on a daily chart, you can be doing it on a 30-minute chart, 2-hour chart. It doesn't make a difference what time frame your chart is, just as long as where you use your time frame to determine what the trend is of that pair, that currency pair. So what I like to do is I just like to scrunch my candles down. So I scrunch my candles down and I can see that we're in an uptrend on this hourly chart. So I'm only looking for long trades. Okay, I'm looking to do my ABCD patterns to the upside. Okay, and then we just come back here and we just bring our candles back out to normal size. Okay, so the first thing that we need to do is we need to find, okay, you can draw a trend line if you'd like. I think it's sometimes pretty helpful if you do draw the trend line. But you can draw a trend line and just take this trend line out from this low here. Just take this out, bring it up to the first touch. That looks like about there. And that's extended out. Okay, that just tells you, listen, you're in an uptrend, and just be aware of that. Okay, so what we want to look for is we need to find the high. This is current price. Now I'm recording this lesson on a Sunday, so this is not a live market. In fact, I just picked up this currency pair, this Aussie dollar, New Zealand dollar pair out of the blue, put it on an hourly time frame, and I bought the candles back a bunch so we can do this. So I have no idea what's in front of these as we click through, but I want to find a high. And the way, how do you find the high is the low's easy. The low we can usually find if you use these dots, by the way, are fractals, and if you use fractals, they're on every platform, whether you use an MT4, NinjaTrade, a TradeStation, what I'm using, MTI's 4.0 platform. They're on all the platforms. You can get the fractal indicator. I use little circles. They mostly come in arrows. You can make them different colors for up and down, but they come real handy in telling you where your low is and where your high is. So we come here and I've just come to my charts and I'm looking for opportunities to take a trade. Like I said, this can be a 15-minute chart, this can be an hourly chart, this can be whatever time frame you deem it could be, and that's just important to know on your time frames. So what we're going to do is we're going to use our Fibonacci tool, and if you're not familiar with Fibonacci, you can go to YouTube and just type in Forex Fibonacci, and you can get all the webinars and information you need on what Fibonacci is and the ratios and all that stuff. But by the time you're done with this lesson, you have a very good understanding of Fibonacci. Okay, so what we're going to do here is we're going to take our Fibonacci tool, and I'm going to take it from this low to this high. Now this is a pretty small range. Okay, this is a pretty small range we got here, and that's okay. But let me see if I can make these bigger. These candlesticks bigger. And that will help us view this a little easier. Let's see if we can do that. Yeah, there we go. Okay. Beautiful. Okay. So what we want to do is, I'm a very visual person, and it makes it a lot easier for me if I can see what's going on. It makes it easier for me to look at my charts quickly and see where my positions are at and evaluate the situation very quickly. So I like to mark everything that's out there. All right, so remember we did an A to B. All right. C has come all the way back to the 8.6. So being that C has come back to the 8.6, our D extension is the 1.8, so that's our take profit area. All right, so then what we're going to do is we're going to take some trend lines and A we're going to keep that as red. And we're going to bring this up to B. And then we're going to bring this up to D. Okay? This will all make sense in a second. Alright, then we're going to go back to normal hours here. So A stays red. B, we're going to change our color to powder blue. I'd like to know where B is. D, we always make green. That's our take profit. Okay. And this one we can take off because I have all mine in there, so we can just delete this one like that. Okay. So we did our Fibonacci. A to B. We're looking for the retrace down to as close to A as possible. If it breaks out below A, it didn't go our Fibonacci way, and we have to reevaluate the trade because we might have a reversal pattern. We might be heading for a downtrend, and we would have to look at that. Okay, so now, as you can see, and what we're going to do is we're going to mark this so you guys can see very clearly what we're looking at. So this was A to B, right? B retraced. Okay, we don't want that extended. We're going to get rid of that there. All right. Now what we need to do is let's see what happens with the market. We're looking for price to come to the D extension. All right. So let's move and see what our candles do. And folks, I have no idea what the candles are going to do, so I'm watching just like you are. Okay, so what happened here? It took out A, right? So what does this mean for all this? Well, it means that this trade is void. It didn't come up to our profit area. Didn't even make it up to B, so this trade didn't work. Okay, this trade did not work. Sometimes they do, sometimes they don't. This one didn't work. So we continue along. Now what am I looking for? All right, So we start the process again. We're still in an uptrend. So we're going to stay with our uptrend. So we're still in an uptrend. This is not a change of trend. We've got a new high. We got 2 to the right, 2 to the left. So we're going to do the same thing. We're going to take it from the low to the high. Alright. Now just to make things easier, I'm going to use the same A's. See, this is pretty shallow, isn't it? And there's B. C does not have to be confirmed, so here's C. And wow, is that close to A or what? Holy moly. So we're going to bring this down. That's A. Didn't take it out, but it is pretty close. And we're looking for D to be at the 1-8 extension. So bring our green line down to D. In real life, guys, in real trading, I always bring this down about 6 pips, 7 pips below my D take profit area. The reason for that is because if I'm seeing that on this, on this fib, there are thousands of other traders that are seeing the same thing. Alrighty, so wow, this is scary because this looks like this might take out A again, right? So let's see what happens here. Remember, if A gets taken out, A is taken out again. Second trade does not work. Okay, now we have a new high, 2 to the right, 2 to the left, low and a high. Folks, we do the same thing. We're still in an uptrend. We don't have a change of trend, so we're still in an uptrend. So we're going to do the same exact thing, right? So A, whoops, that's not what I wanted. No, don't do nothing. I don't want that to happen, but okay. So let's take this, get it all out here. So A is going to come down to here. The A line comes down to here. B comes to where? The retrace again at the 8-6. B is here. So I'm going to bring this down to B. That's B. And this is D. Let's bring B back up here. Alright, so here we got our A, B, C. Okay, so we can mark this again. Use a trend line tool, right? A to B, B to C. Alright. There's C. And we're looking for the D extension. Okay, folks? So here we go. Boom. It has taken our take profit area. This trade has worked. Now, you're not going to take another trade until D is confirmed. You've taken your profit. You've made your profit. Okay? So let's take a look at what that profit would be on that trade. So 2 trades didn't work. And one did. Here's where we entered the trade at the pullback. This is where we exited the trade, 43 pips, and that was our take profit. Okay, but we're not in a new trade now because D's been taken out. So we're looking for a reason to get back into this trade, but right at the moment, we don't have it. We do not have it. What happens is, this is C. Now comes A. C becomes A. And D becomes B. Whoops. D becomes B. Okay? So, where's our D at? There it is. We'll use this D over here. Okay, we're just going to stick that on the side there. So this is our new A, B. Okay? We're going to use that high. Alright, so we're going to do the same thing again. A to B gives us our new fibs. Pretty close to the old ones, huh? So this is our new A. This has retraced back to the 618. There's B. And D comes up now to the 618 extension. C is at the 618. That's why these are color coded. Makes it easy, right? If you come to the 38.2, the 50% of the 618 fib retracement, you go to the 618 extension. Okay? So let me finish plotting this last one that we did, and this came to the D extension. Okay, so this one worked. That was a good one. Okay, so now we have a new one, right? And I think we're gonna have to make this a different color because I think we're gonna start getting confused here if we don't make it a different color. So let's make this a different color. This is our new AB. So here's A to B, B to C, okay? And we want this to come up to the D extension. That is our target. Okay? Everybody with me so far? Good. And let's see what happens. Let's see if it works. Didn't work, did it? Trade took us out. This trade's void. If you entered at C, you probably got break even on this trade. Right? If you entered at the 618, once this broke B, you would have moved to break even. So you would have been out. How many pips is that? I could be wrong there. This looks like maybe not. Yep, 22 pips. I'd be break even. Okay. So break even, but now this is void, right? This is now void. So we got break even on one. So we've got 2 losses, 1 win, 1 break even. And now I have to shrink this all back down again. Okay, let's move this back up here. There we go. What you could do, folks, is you can get rid of these fibs as you go along, and just mark like I did on this one. and then what you can do is you can delete these other fibs, but just keep your last one. And you can delete these. I'd keep the last one in there though, just so you can see it. Okay, so what are we looking for? We're looking for a high. We're still in an uptrend. Nothing doing that though. Still looking. Okay, there we go. We have an established low. We have 2 to the left, 2 to the right. We have an established high. 2 to the left, 2 to the right. Okay, so that's going to be our new fib. Okay. We're going to bring this up. There we go. And we're going to take our A. Whoop, that's not what I wanted. Give me my A. So A is coming here. Alright. Oh, that's not what I wanted. I want B. Come on, B. Hook in there. That's B. Let's bring our B line down to B. Alright, and we're hoping that C comes down to the 618. If you get a shallow retrace above the 38.2, you end up with the 20/80 rule. And basically what that means is there's only a 20% chance that it's going to make it to the D extension. Okay. If it gets to the 618, you have an 80% chance that it's going to make it to the D extension. Okay, and there's D. That's what we're looking for. So again, here's our ABCD. This was our fib, A to B. We're looking for the retracement, and we're looking for the D extension, right? I'm not going to mark this with lines this time. I want to make sure that you guys really have a very good understanding of how this works. Okay? I don't know if this trade is going to work or not, but let's keep going. We're out. Okay? Why is this not a loss? Because we've never entered the trade yet. It's come down to C, but we've not entered the trade. We have not gotten a bullish candlestick formation to go to the upside. You just don't blindly take, when it retraces, you don't blindly take the 618 just because it hit the 618. All right? It came down to the 382. This is all bearish. We're not in the trade. We're not in the trade yet. Trade has not given us a bullish candlestick formation. So we're not in this trade. We're still not in this trade. Little congestion here. Pops up. There it goes. I'm waiting for my setup. I don't have a setup yet. Waiting for my setup. We're not into another trade yet. So we've gone quite a few candles and we don't have our setup yet. I don't have a higher high. I don't have anything. Okay, there's a higher high right there. Let's see if we get 2 to the left, 2 to the right. Okay. Now we have a setup. Okay. Here's our low. Here's our high. 2 to the right, 2 to the left. Like that. Took out these highs here. Alright. So now, we never entered this trade, so this one doesn't count. Because we didn't enter that trade. Never had the bullish candlestick formation. Same thing. Real quick. We'll move a little bit quicker now. Now that you guys have hopefully an understanding of how this is working. So here's A. There's A there. There's B. Oh, that worked out nice. Okay. C we're going to put over here on the side. And D we're hoping is going to be the 618. But we don't know yet because we don't have our retracement. So we don't know where C's at yet. So we don't actually know where D is going to be. If it comes all the way back down to the 8.6, right, it's only going to go to the 1.8 extension, or the 7.86 it's going to go to the 2.7 extension. So let's see what happens. Retrace down to the 382. Bingo. There's our entry. This is our entry. This is C. Alright. So this would be your entry. Let me highlight that for you. Okay. This is our entry. So we're in the trade. We had a bullish candle, second higher low. We're going to take this up. It came down below the 382. So being it came down to the 382, where is D? The 618 extension. Okay. Again, this was our fib, A to B. We trace down to the 382, and let's see what happens. Ooh. Wow, that looks like that was a news candle, huh? Bingo. That's a win. Alright. Now, we can't do C to A and D to B yet because of why? We have not confirmed that this is the high. So what do? We wait for price to give us 2 to the right and 2 to the left. We're out of the trade. We've made our profit. We've made our profit. We're out of the trade. So that's not an issue. Now what we're looking for is a new entry. Price is just all over the place. Welcome to trading the Aussie dollar with any other pair. Again, we're not in any trades here. Okay, so we did have 2 to the left, 2 to the right, 2 to the left, 2 to the right. This high is confirmed. Now we're just waiting for a new entry. Alright, there's no entries here. No entries here. That's a definitely confirmation of that D, right? It's closed above the D line. Another high. This is moving up, isn't it? Look at this. We're not in any trade yet, are we, guys? Still hanging. Okay. We have a setup, right? Here's our high. 2 to the left, 2 to the right. A to B. A to B. Right? So let's take our... Oh, I didn't want to do that. Delete. Thank you. I'll go back to normal hour here. So we want to take our A. We're going to take our A line here. Bring it up here. Okay. We're going to take our B. Bring it up to our B line here. It's a pretty wide range, which is good. Okay. C. C, we're hoping to come back to the 50% of the 618. Okay. And then we're looking for our D, right? Let's bring this down a little bit. And we're hoping that the D is going to be at the 618. But we don't know yet because we don't know what the retracement is, right? So we'll just take this. Now let's just move that up there just for now. Let's see what happens. How the trade works out. And we move along. Okay, so we have a 382. So the 618 is good. Are you in the trade yet? You in this trade yet? Of course not. You have a bullish candlestick, but you have, look at this wick, right? So you're not in the trade yet. Not in the trade yet. Bingo. Okay, get a bullish engulfing candle, right? Closes. Now what's the problem? Well, where's price? Price closes at 1654. 53. Okay, 1654. Price closes. Is this reasonable to take this trade to the D extension? It's 31 pips. Okay. The problem is, where's your stop going to be? Didn't talk about that yet. Remember, your stop loss is always below A. So this trade is really not feasible because your stop is going to be a lot more than your profit. 113 for 33. 30? No. So, would you enter this trade? Absolutely not. Risk to reward tells you this is not a good setup. So you've never entered this trade. This candle happened, but you didn't get in. You're not in the trade. And I forgot to mention this, but always remember that your stop loss is always below A. Your stop loss is always below A. Now, what if this just broke B and came out here and closed? The next candle you get a higher low. Can you take the trade? Well, that makes sense. Yeah. Okay. Where would your stop be? I would put it to 618, under the 618. But the rule is, if this comes back and stops you out at the 618, you have got to be willing on the next bullish candle to re-enter the trade to the D extension. If you're not willing to do that, then just don't enter the trade. Just stay out of the trade. Or risk to reward says this is not feasible if it closes above B to put your stop down here. You're not going to have 113 pip stop for 40 pips, right? 50 pips. So it's not worth the trouble. So we move along. We're not in this trade. Didn't get into it. We're not in the trade. Price comes around. And we are just working our way up here. And I'm ignoring all this. This makes no difference to me now. This is in the past, right? We're just looking for an opportunity. We're looking for the trade setup. And right at the moment, I don't see no trade setup. Remember, our bias is that this is a bullish pattern. I'm going to run out of candles here probably soon. Look at how this is retraced all the way back down. Right? Let's come all the way back down. Look at this. Welcome to Forex, my friends. Okay. Here we go. Is that a setup? Sure. Absolutely. You actually could have did this setup here too. 2 to the right, 2 to the left, and that was a higher high. But we'll use this one right here. This will be the last one we do, guys. Just because of the time factor on it. And being that I'm recording this, I do not want to lose it. And we're almost at 35 minutes into this video. But we will definitely do this again. And this takes a little bit of getting used to. But really, for those of you who trade fibs, you all do it every day. It's just not as visual. And when you use the ABCDs, it just makes it more visual. That's really the... Remember, your stop is always below A. right? And of course we don't know where D is going to be yet because we don't have our retracement. We're going to assume we're going to get to the 382 or the 618. We'd like to and take our trade to the upside. We're not in the trade yet. We've plotted it out. That's what's nice. There's no emotion in this, is there? This is pretty cut clear. This is not difficult, right? You don't have to guess work anything. You know what you're looking for. You know what you're looking for in your retracements. And you're looking for your retracements. You're looking for a bullish candlestick formation. And that's it. This is like a fraction of a pip from that 382. But it closes and what happens? You get a bearish candle. So you're still not in the trade. Still doesn't work. Comes down. Nice to the 618. There's your first bearish candlestick. Ooh. You can enter the trade here? You can. There's your bullish candlestick formation. So, for time's sake, let's say that you do enter the trade here. Okay? So, this becomes your entry. Okay? That's your entry candle right there. Your stop's under A. Does it make feasible sense? Risk to reward? Well, this is your entry. Sorry, this was your entry. And that's 35 pips. These extensions at 121 pips. Yeah, I'd say that's pretty good risk to reward. 35 for 130. That's good. Not liking that. What's the other important part about this is that don't fiddle with the trade. Once your trade is on, let the trade go. Don't be moving your break-evens too quickly. And I have to be honest with you, sometimes I have a problem with that. I start fiddling with the trade. And what do you think happens? Yeah, exactly. I end up getting stopped out to watch the thing an hour and a half later be in my direction. Look at this, come pull back. Still hasn't taken out A. Moving a little quick. Oh, there you go. So, we got stopped out. It's a loss. Okay? Just for giggle's sakes, yeah, we got stopped out. It's a loss. So now we have to watch to see what's going on. So that is the ABCD strategy. I will do ABCD strategy part 2 within the next couple of days. This is part 1, where we'll make it, hopefully, really get it into you so you have a complete understanding of the ABCD strategy. It works. I've been using it for a long time. Well, the pullback strategy, not the ABCD strategy. I thought it was pretty cool the way they do it. And let's come back to current price. And that's current price. As you can see, it comes all the way back up. So we would have had some winning trades if we would have kept going. Look at this. This would have been a winner trade. Look at this. Here to here. Pulls back. Boom. You would have hit your D extension. So there's quite a bit. As long as you trade within the trend, I think that's really important that you know, if the river's flowing downstream, why would you want to fight it going upstream, right? So you really want to trade within the trend. If you're trading a 1 hour chart, you know, go to the 4 hour chart for confirmation. If you're trading a 15-minute chart, use the 1 hour chart for confirmation that both charts are in the same trend direction. It's great. In fact, we saw it in my last training video when we were talking about trend lines, support and resistance lines, where we had all 4 charts. I use 4 charts: the daily, the 2 hour, the 1 hour, and the 15-minute. And all 4 charts were in the same trend. Very, very nice. Very nice way to trade when you see all your charts are trending in the same direction. Makes you feel a little bit more confident, right? And do not fumble with your trades. Well, folks, I'd like to thank you for watching this lesson on the ABCD strategy using the Fibonacci tool. As you notice, there was no other indicators on the charts. You're basically going off your fibs. So I think we came out we've had 3 losers, 1 break even, and 3 winners. So you would have come out at the end of that day, if you took all those trades in one day, it would have been a profitable day. Okay? And remember, folks, if you can win 40% of your trades, that means you're winning 4 out of 10 trades. You can be a very successful Forex trader and do very well. The nice thing about trading, whether you use futures, options, if you're trading pork belly pigs, you know what the nice thing is? If you can read a chart and you can read candlesticks and you can use Fibonacci and you can do this, you can trade anything. You don't have to just trade Forex. I mean, I trade Forex and I trade options. I trade both. So if you can read a chart and analyze a chart and understand candlesticks, folks, we will do a lesson on candlesticks. You have got to know candlestick formations and patterns. Go to YouTube, put Forex. The guru of candlestick patterns is Steve Nissen. N-I-S-O-N. Nissen. Was it? Yeah. Check out he's got webinars on YouTube. They're almost 2 hours long, and he goes through all the patterns and all the candlesticks and all that stuff. You can go to tradingwithbill.com and you can see when I'm doing my next webinar on candlesticks, and we go into the 7 candlestick formations. That's all you need to trade successfully if you know those 7 patterns. Again, go to tradingwithbill.com and you can check out under webinars when my next webinar is and what the topic is. Again, thank you very much for watching, and we're looking forward to our next session, and have a great day. Thanks again, my friends. Bye-bye.